Hi there, welcome to Stellar Wyckoff Technical Analysis session. So Stellar is still within the downtrend. However, the more important thing is it seems like the bulls and bears are battling very hard along the green key level of 33 cents. So let's quickly take a look at both the weekly and daily charts and see what indications we can get from the price actions. If you're new to my sessions, these are the takeaways you can expect. Basically, what current and potential future Wyckoff stages Stellar is at, and key price levels where Stellar would find resistance and support, and breakout timing if there's any. So let's start with the weekly chart, and we've already talked about this green key level 33 cents, and when we get to the daily chart, I will show you how fiercely the battle is. In terms of Wyckoff stages, we have just gone through two other periods. So obviously there was another LPSY, so see these two peaks over there, and that's definitely heading towards a sign of weakness. Like I said, there was 75% chance for the price to come down to either of these levels, and now that it's getting or edging below the 33 cents green key level, the tendency that the price reach somewhere close to what we had back in early February is getting nearer and nearer. I put this sign of weakness at this level below the yellow key level of 24 cents 50. Because if the price doesn't exit this downtrend, then that chance is still high. I mean, reaching somewhere close to the yellow key level. If it bounces eventually and exit this downtrend, then we can reduce this probability. But as of now, that still remains. And then let's look at the Bollinger Band and counter squeeze. Currently there was no squeeze. The previous squeeze happened, it shot the price up, and then it's now swinging the price back down. So what happened on Friday was just a one-off outlier event, but if you look at the chart, it's exhibiting similar behavior compared to previous squeeze or post-squeeze period. So we had a squeeze back in here, November 2024. That's when the price shot up and then eventually died down and like basically got into a smaller and smaller swing. So what happened here after June squeeze? We have this big swing up, but then we're having this downward or dying down wave, waiting to get into another squeeze period before the next wave comes in. So it's a pretty interesting observation using this indicator. Because this is the weekly chart, it may take a few more weeks or even months for the squeeze to appear again. So in future sessions, we'll get to see that eventually. So we've talked about the Wyckoff stages, we've checked the squeeze. There's no particular time point at the time being, assuming the price is continue its downtrend instead of trading within this triangle formed by the center line, this dashed blue line, and the green key level. Because if it trades narrow range, then eventually there's something, the breakout would happen that's similar to what we had in late or likely at the end of September, where that price broke out on that week just to swing towards the downside afterwards. Okay, so we're still like 2-3 weeks ahead, and the price is already going downwards, so it's already broken through the green key level. There's still 3 days and 20 hours left for this week's candle, so I won't call it absolutely broken the level too early, but as of this moment it's staying below it. So let's get to the daily chart and see what's going on there. So when I say the, the battle was very fierce, let's move the sign of weakness over here. That's definitely has happened. A lower sign of weakness compared to those we have on the left hand side back in September and end August. So this might as well be another LPSY. The battle around this green key level, you see what happened Friday, everybody knows. It fell below this green key level. The next day on Saturday, the bulls tried to reclaim the level but failed. But on Sunday, they were successful, and Monday they continued the uptrend to went above the center line of the long-term playground, not center line, the intermediate level that's formed by the sign of weaknesses. So they reclaimed that level, however, it didn't last long. So the next 2 days it immediately followed and even broke below the green key level. And today, there's still roughly 20 hours left, but then you see the rejection from that level, right? You see this wick at the top, but at the bottom, again, the bulls are pushing it up. Just that the price on the volume is very low. So over the past 4 days, the volume was like less than half of what we had on Saturday. So the bulls and the bears were fighting over here, pressing or compressing the price to this narrow range. The next few days, probably there were very little supply, and then quite a bit of people were trying to buy the dip. That's why even with low volume, the price got pushed up to somewhere that basically you see the mismatch between the volume and the candlestick, the length of the candlestick body. And eventually what we have here today is like, okay, after 4-5 days of battles between the bulls and bears, everybody is seeking direction. Not much trading like wide range, and people are still like seeking for a moment where there are news to push the price to either side. And as of now, like I said in the beginning, the tendency is going to come down to test the bottom edge of this downward channel before it try to bounce up to test the other edge, much like what happened back in here the whole period. So it bounces to the upside, downside, getting close to the ceiling, come back to the bottom, and eventually doing the same maneuver since July, mid-July. So the trend still hasn't been broken, and we're expecting something similar to happen. So the support level is definitely the bottom edge of this blue box, as well as this white line over here. This white line is the ceiling of the long-term playground zone, this white box over here. So that's around 27 cents. I know it's still far, but if the price comes down in the next day or two, it will eventually first test this white line before it can go test the this blue edge. Well, if it really drops in the next 3 days, there's a chance that it hits this dual support and then bounce quite a bit, at least maybe to around the green key level, as well as this blue dashed center line of this downward trend box, before the big guys decide whether there's sufficient demand to push it further up or like rebound from that level, like what it did here back in mid-September, before it find a place to gain its foot and then maybe do another bounce again. So it's pretty busy over here with multiple levels from these sign of weaknesses that happened earlier in the year. So that's exactly how Stellar got into now. So in terms of Wyckoff, we'll talk about it's 50-50. PS Spirit preliminary support 50%, meaning it's probably going down towards an accumulation cycle. So that's where it was. Technically speaking, the price is currently at somewhere near the top of the accumulation cycle back in March to July. If it comes further down to near the white line, that's essentially getting to the accumulation zone. The interesting thing over here is there was something like a mini distribution over here. But when I look at it now, it's probably the end of the accumulation rather than a new distribution. That's the interesting part when we look at the daily chart. So if I take out that's sign of strength over here. That might be something like a PSY period, but it's very, very difficult to differentiate. So sometimes if you want to, you might want to really just do this entire period as an accumulation, and this is only a higher level of sign of strength, because if we go to the weekly chart from March to July, what happened was from March to July, that was a period where we had our sign of weakness and just one LPSY. So it's not wrong to say that's a distribution, because maybe the big guys are really offloading whatever they have left to the people, and then that's when the price went down. Or they are trying to shake out the people where they got their last bunch of stocks before they push the price up again. So there's 2 rounds of distribution that happens during this period. So here, I would say they are probably the big guys, the whales, are gathering from the people, the small fishes, whatever those small fishes have on hand, before they pushed the price up. So that's why I put in 2 accumulation cycles over here. One very quick one with this bit of thing. If you ask like how to tag them if you consider that just one single the accumulation cycle, like I said, you probably want to tag this as just a sign of strength, and then eventually that was another test, 2 other tests basically. Just 2 other tests before the price launched. So that's a simpler way with just 5 stages: selling climax, automatic rally, spring, sign of strength, 2 of them, and then one more test period, and then launch. That's a lot simpler. And then here, again, we've got a second scenario. The hypothesis is, instead of what we are tagging here, for late or mid-late stage distribution, there's a chance that Stellar is accumulating right now. So if what happened back in the beginning of September was the selling climax instead of a sign of weakness, and we've got the automatic rally in mid-September, late September was the second test, and then a sign of strength in the beginning of this month. What happened now was, well, a few days ago, this is spring, that's possible, and we're expecting it to shoot up after the spring, and that's why we've got a 50% chance here and 50% chance over there, because we never know what the big guys are planning. And it looks to me there are 2 patterns over here, and the Bollinger Band corner squeeze is indicating that we had a squeeze just a few days back, and if that is true, then we would expect some price swings to happen. If it happens, then that's where the price can potentially swing to in the daily time frame. Okay, so let's go back to the weekly, and just to recap, a higher possibility towards a lower level sign of weakness, and still a chance to head up for a second test at the blue key level of 47 cents 50, but the prerequisite is for the downward channel to be broken, meaning the price has to break outside of this blue box, and that's not something easy with multiple resistance lines plus the key macro environment impact that we have